The online ad market is bouncing back. But the spoils are not being evenly shared. After Meta blew away Wall Street estimates last week in its fourth quarter earnings report, pushing the stock to a record, smaller rival Snap came up short on Tuesday, sending investors rushing for the exits. Meta's ad business, which includes Facebook and Instagram, grew 24% from a year earlier, lifting the company to its fastest rate of expansion since mid-2021. Snap reported an increase of just 5% year-over-year, its sixth straight quarter of single-digit growth or a decline in sales. That's slower than advertising growth at Google, Amazon and Microsoft in addition to Meta. Based on investors' reactions, Snap is headed for one of its worst days on the market since its debut 7 years ago. The stock dropped 33% in extended trading to $11.75. Its two biggest one-day declines were a 43% drop in May 2022 and a 39% plunge 2 months later. Meta, by contrast, soared 20% on Friday after the company reported a tripling in profit, beat estimates on the top and bottom lines, issued an optimistic forecast and announced that it's paying a dividend for the first time. "We're seeing the bigger companies get bigger and smaller companies are slower to rebound," said Jasmine Enberg, principal analyst at Insider Intelligence. "Snap is one of those, in the latter camp," she said. For the first quarter, Snap projected revenue of $1.095 billion to $1.135 billion, which would equal growth of between about 11% and 15%. The middle of the range, $1.115 billion, was just below analysts' average estimate of $1.117 billion. Broadly, the digital ad market is recovering from a brutal 2022, when soaring inflation and rising interest rates led brands to reel in spending. Now ad platforms are seeing improvements from a more stable economy along with upcoming events like the 2024 Olympics in Paris and the presidential election later this year. As Enberg noted, the rebound has been uneven, and has benefited Meta and other giant tech companies like Alphabet and Amazon, which all reported advertising growth in the double digits for the fourth quarter. On Snap's earnings call on Tuesday, CEO Evan Spiegel faced questions from analysts about why the company is lagging behind competitors. Rich Greenfield of Lightshed Partners asked Spiegel if Snap's smaller size compared to Meta represents a fundamental long-term issue. Spiegel responded by saying that Snap is certainly one of the largest internet services, and while some platforms are bigger, I think there's enormous opportunity for us to continue to grow our business. Barclays analyst Ross Sandler asked Spiegel, "Why aren't we seeing more progress and getting that growth rate up to the levels of the broader digital ad industry?" Spiegel started the answer by discussing his excitement around the progress we're seeing especially in our lower funnel business, referring to the upgraded capabilities of its online advertising platform.